Good morning. It's Wednesday, October 30th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's explosive rally. It resulted in record high in the gold market as the JOLTS job opening data fell to the lowest level since 2021. Now, don't tell anybody, but when companies aren't hiring, when the job openings decline, it doesn't mean they're operating at full employment. They're just trying to be efficient. It's often a leading indicator of how the labor market plays out over the coming months. What you want to see is a company have many job openings, and that means that they are truly trying to expand and things like that. And people often take this number and they kind of misconstrue what it means here. So you want to see more robust job openings. So looking at the silver market, it also broke out of a 3-day consolidation. Now, I detailed that setup for you in yesterday's Metals Minute. So if you're yet to see it, please go back and watch it. Now, we did see an attempted breakout in copper as well, but the rally was quickly capped. The reason is that China is more keen on waiting to see who that next U.S. president is to determine the size of the next stimulus package. So remember, Trump should take a harder stance on China, resulting in a larger stimulus package from China going forward, rather than a Harris victory where they would kind of throttle back. So it doesn't make any sense for China to announce a package pre-US election. The other reason why you've got this little bit of volatility in the copper market is perhaps you do have traders that are short that market now. You get a small surge to the upside on the possibility of an announcement, and what traders do is cover those shorts. Small bit of momentum buyers come in, and then as the rally fades out, they kick that out. So if you look at the current trend on copper, it's neutral, but it does have a slight upside bias in my opinion, being that it's a hard asset, and we all know that inflation is rising. So the trend levels on the copper market, I would kind of write this down, is 445.65. If we get a close above that level, we're going to see traders most likely chase the futures and scramble headlines and kind of scrutinize global inventory data. Oftentimes these prices get this kind of level of a breakout ahead of key Chinese policy announcements. So looking at the US equity markets, we did have the NASDAQ reach a new record high. Alphabet reported third quarter earnings and revenue that beat Wall Street estimates. For those of you that are working with us on the wealth management side, Apple is one of our top 3 holdings at the moment. Now, looking at the overnight price action on the precious metals, we do have December gold up $13.50, $27.94 last. Did break out over 2,800. No real follow through, as it was a little bit lighter of a volume type of overnight session. Traders were focused on other things that were moving and shaking. 2801.70 was that high. 2785 was your low. So 2775 I think is really going to be your first level of support. Below that 2763, and then kind of that line in the sand. Not necessarily a total line in the sand where I would adjust positions, but 2750 gets you at that moment where you go, hey, is it going to break back down into the consolidation phase of 2700 to 2750? So that's kind of my analysis on the gold market. You look at silver, down 10 cents, 34.34. 34.69 being the high, 34.27.5 being the low. So kind of middle of the range here in the overnight session. You do have copper hanging out right around that 435 level. Aluminum having a slight pullback. Palladium and platinum. Platinum down 17 bucks at 1042. Palladium, that was the interesting one because we really broke out to the upside yesterday. Remember, we've been talking about palladium on how the U.S. wants to impose more sanctions on Russia and specifically target the companies that produce about 40% of the global palladium. Now, palladium broke out to the upside, made a higher high on the charts, and closed really near the low of the session. And it's kind of a bearish fractal pattern. And we've got this follow through to the downside here today, down about $46. So hopefully those of you that were in that were able to recognize, because we were calling some of our clients, raising those stops up here, tightening up the belts on that palladium market. Now looking at some other overnight developments that are occurring, we do have the possibility of a peace agreement in the Middle East. Crude oil futures are actually rallying on that type of news for whatever reason. Could be the drawdown on API, also could be front running this EIA inventory data that's been coming out. We've seen robust strength in the product markets, things like gasoline, things like heating oil, and it's helped lift and offset some of the crude oil. Now, the production has been higher with the imports rather than demand, so a small bearish pivot on the crude oil market at the moment. Bitcoin hovering right around 73,000. We'll see what happens. That's kind of hitting a peak euphoria as we're seeing a broad-based rally in much of the other cryptocurrencies. Now, other overnight developments here, and this is kind of key. This is also why I think that the gold market is pushing to the upside here, and you do have some of the foreign currencies a little bit weaker. So the Eurozone economy grew at 0.4%. The analysts were expecting 0.2%. And I'm going to tie in where this goes with the metals here. So you got to follow me on some of these things, because remember, it's not just specifically like looking at gold and looking at a gold chart or looking at silver and thinking conspiracies are against you. This is a global economy, and the global economy impacts the different markets that are out there, regardless of the commodity or regardless what stock you're trading or investment. If you own a house and all of a sudden the house depreciates in value, well, chances are something happened to the houses around you, or interest rates, or the economy, or things like that. So it's important to note all these different things. So the Eurozone's biggest economy, Germany, it grew at a surprise growth of 0.2% in the third quarter. That allowed that Eurozone's largest economy, Germany, to avoid the recession that many had forecasted. Now, it does cite struggles with a downturn in the manufacturing sector. Remember, silver is 54% manufacturing, although Europe is not really a big player, but that's why we monitor manufacturing data coming out of China. And also, the Eurozone had cut rates for the third time this year at the October meeting after that headline inflation was at 1.7% in September, so a little bit lower, and that's where they were able to cut rates. If we watch that headline inflation number, it starts to tick up. Chances are they won't cut rates as aggressively. And I think that's why we have a 25 basis point interest rate cut priced in at the December meeting. Now, why is the Eurozone GDP important? Because of the fact we're seeing the Euro currency push on up here in the overnight session. We also do have the British pound under a little bit of pressure. Guess what? They're rotating, selling pound, buying euro. But the Eurozone, the euro currency, makes up the largest weighting against the dollar index. So you got the dollar index down 14 points, still anchoring right around 104. But remember that correlation between the dollar index, other key commodities out there, and that's why we're seeing a small lift in that gold market. Now, some other things here. We do have some economic data coming out today. We have the ADP employment data. It's a little bit volatile. At certain times, they do take it very seriously. It comes out at 7:15 a.m. Central Time. As of this recording, it's 5:51 right now. So they are looking at a smaller contraction on the employment. We'll also have GDP data come out of the US, the advanced GDP data. Quarter over quarter, expected 3% advanced GDP prices. They're looking at an expected 1.9% quarter over quarter. Now, an interesting read last night was that the exchange traded funds, and I spend a lot of time at night in the later hours looking at this stuff too, is that the exchange traded funds added 52,644 troy ounces of gold to their holdings in the last trading session. So that brings their total amount to 1.52 million ounces. Basically, in a nutshell, they're continuing to chase and add gold. And remember, I told you that after that first interest rate cut, about 30 days, and that's kind of where we're at right now, is when you start to see the RIAs and the wealth managers start to allocate. And a lot of the different interviews I listen to on different wealth advisors, now they're incorporating gold into their holdings here. So that's where you continue to see that upward tick on it. This is where things get interesting, is that the ETFs, they cut 462,000 troy ounces of silver from their holdings in yesterday's session, bringing this year's net purchases to 39.8. So they cut silver holdings. Why are they doing that? What does that mean? Is that traders are continuing to take profits and chase momentum rather than committing to holding silver for this move to $40 or $50. You do want to see more of a broad-based holding and a hodling thing. The deal is, though, is that you're going to see a faster upward price trajectory as those kind of quick momentum traders snap into that market. Chances are they were exiting the silver market yesterday because of the fact that they saw that kind of breakout of a 3-day pattern, and they went on and chased things like Google, which was up about 5.5% in the overnight. These people tend to be less committed to the relationship with silver and just in it for more of the fling at the moment. So that's why I do have to ask you, and people that hold physical silver, right? And I'm not bashing you at all. Remember, I tell you that you want to have a broad-based approach when you have precious metals. You want to have all the different weapons out there. You got a shotgun, you got a rifle, and you got a pistol. They all serve different purposes. So you got your miners, your physical, your futures contracts. Now, the physical is that if you're only committed to the physical and you get this movement up to 45 or 50 bucks, how are you going to really capitalize on it? And if you don't, well, then it was just an old saying and an old tale at a party, a dinner party. Well, I had that physical gold. It went to 50. I was worth $1 zillion, and well, it corrected with the Chinese economy later. So that's why I think you need a vehicle that you can at least monetize if you get this kind of upward here. Now, why are they rotating? Again, those silver guys could be chasing palladium, which the holdings did increase for the 7th straight day, although they're probably going to panic and sell out and park their money in the gold market. So getting longer video here, but man, it's a lot to unpack. These markets are exciting. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.